With things, for now at least, settled between the US and China, the trade deal is set to be signed on January 15th. The markets managed a perky start to 2020. That is until Donald Trump killed top Iranian General Qasem Soleimani via a drone strike near Baghdad airport, causing Iran to swear severe revenge, World War III to trend on Twitter, and the markets to suffer a significant New Year setback. Though Soleimani may be unknown by many in the West, some political analysts have likened him to a US vice president in terms of profile, while he has previously been described as the single most powerful operative in the Middle East. Important to bear in mind when considering the kind of response that could be expected from Iran, brackets, a nation, remember, that has major ties to Russia and China. Since the assassination, things have continued to escalate. Iraqi MPs passed a non-binding resolution calling for US troops to leave, pausing operations against ISIS, prompting Trump to threaten the country with sanctions. Meanwhile, the president vowed to hit 52 sites in Iran very hard, perhaps in a disproportionate manner, if the country, which has cut its commitment to the already unravelling 2015 nuclear deal and has promised a dark day for the US, retaliates. Uncertainty then reigns, with investors on tenterhooks as to what will happen next. In a sign of how abrupt the change in sentiment was, by the end of Thursday, 2nd of January, the Dow Jones was striking fresh all-time highs of 28,900. As the losses mounted in the aftermath of the assassination, the index found itself hitting 28,400. Oil, understandably, has risen sharply since the attack, hitting a 7-month high of $70 per barrel. Gold also struck its best price for 7 months, with safe haven-seeking investors sending it to $1,578 per ounce. One of the side effects of the Iran-US conflict is that suddenly no one is talking about phase 2 of negotiations between the US and China, something that was all set to be the defining macro narrative for at least the first quarter of the year. It'll be interesting to see how things develop between those two superpowers, especially given China's aforementioned ties to Iran, and whether that will disrupt not only any potential phase 2 discussions, but whether it will have any influence on disrupting the yet to be signed but sort of in place phase 1 agreement. It also remains to be seen how much data can break through in this current sort of fearful geopolitical climate. The real test of that will be on Friday when the US non-farm jobs report is released. Wage growth is set to rise from 0.2% to 0.3% month on month, with the headline non-farm number dropping from 266,000 to 150,000. Of course, however, Friday is a long way off and things could be very different by then between the US and Iran. Iran is yet to sort of officially retaliate, and it remains to be seen in which way the country will retaliate, be it via cyber attacks or attacks on US troops on sort of Iranian or Iraqi soil, or something more covert, perhaps like some kind of terror attack that would be more difficult perhaps to overtly trace back to the country. Like I said, however, the markets sort of remain gripped by this crisis and sort of in desperate need to see what the next steps will be in the coming days and weeks.